Welcome back to another 5-minute small business tips where you give us 5 minutes and we'll make you a better business person. I'm Stuart Goldstein, CEO and President of Goldart Consulting. We are small business specialists. I have a 35-year business career with both Fortune 500 companies and on Wall Street. But for the last 24 years, I have been working exclusively helping small businesses. Today's tip comes from our book, Small Business Tips to Live By, which is available on Amazon. It is number 2 in the Management and Execution section, and the tip is, never forget about R.O.T.I. As always, first, let's define our terms. R.O.T.I. stands for Return on Time Investment. It's a calculation analyzing the value of investing your time into a project. It can be calculated as an investment return, some benefit we receive, divided by some time frame, the amount of hours in months and usually years that we need to put into that project to get that return. For return on time investment, we need to define the word project very broadly. It can be anything that requires time, such as a new client we're going to take on, or an activity that we're going to tackle, or an investment that we're going to make. It is a broadly defined definition of project, and we need to develop a return on that time investment. Now let's go back to today's tip. Never forget about R.O.T.I. Everyone in business remembers to focus on ROI, return on investment, and rightly so. If we're going to use some of our precious capital, our precious cash, and invest it into a project, it is essential that we receive a sufficient return to make that investment worthwhile. However, far too many small business people forget about R.O.T.I, return on our time investment, and for a small business, it is equally essential. In business, we must all make decisions constantly about project worthiness. Is this project, this client, this activity, this investment worth it from a financial perspective? I would suggest that we also have to analyze it from a time perspective. I want to introduce a new term here. Opportunity cost. It's the price we pay for pursuing one activity while not pursuing another. Because in business, financial limitations exist. We don't have unlimited cash to pursue all projects. Certain projects will be pursued and others will not. We have to make strategic decisions based on what we think we can achieve because cash is limited. Opportunity cost is the price we pay for not pursuing those other projects. Opportunity cost can have a substantial financial effect on a business. If we choose wrong in terms of where we invest our cash, choosing a project that did not generate a sufficient return on our investment, the ramifications for the business can be very serious. The cost of not pursuing the other projects, they are the lost revenue or cash generation from those projects. We call that in business opportunity cost. Here's the key point. For small businesses especially, time is as often limited and as limiting as cash. Most small businesses are made up of less than 10 people. Thus, there are a limited number of hours in the day that the staff, the team, can work on any one project. Thus, there is a time opportunity cost of pursuing things that are not worth the effort and not worth the investment. It's important to note that the longer a project takes, the greater risk it won't be successful. Time adds risks and adds problems that sometimes can't be overcome. Imagine a project where it has a good financial return, but it takes up all of your time for a long period of time. Perhaps it's a client that is very demanding or an activity that is very labor intensive. The question is that worth it? While there is a good financial return, it is not necessarily worth undertaking. The question becomes, is it generating a good return on your time investment? We need to remember that projects need to be analyzed on both a time and financial return basis. And the great choices, the ones that are worthy of our effort and our investment, work on both a time and a financial perspective that will generate a return on investment, ROI, but also generate an R.O.T.I, a return on our time investment. So in conclusion, today's tip, never forget about R.O.T.I, return on your time investment, and make sure when you're making your choices about where to invest your money and your time, you can generate a return in both of those perspectives. That's all for today. A friendly reminder, business must be approached as an intellectual endeavor. The best business people are always finding joy in the intellectual challenges of the mind that business generates. Please stay tuned for the next video in the series, and as always, please like, follow, share this video with anyone you think it can help, and subscribe to our channel so you don't miss our next video in the series. If your business has any issues you would like to discuss, please feel free to reach out to us. The information to contact us will be in the video notes. And as I mentioned before, our book, Small Business Tips to Live By, is available on Amazon in both paperback form and Kindle ebook. This has been 5 Minute Small Business Tips. We'll see you again in the next video.